This is our privilege that we have achieved so much by getting one of the dignitaries, particularly in the field of economics. He is Dr. Mahapatra, who will talk about the budget focus. Budget means the amount of money or resources that earmarked for a particular institution, activity, or the time frame, and an itemized summary of intended expenditure, usually coupled with that the expected revenue or flow of revenue. And basically, in all institutions, all organizations, state and nation, the budget is very much important. And we must have a rudimentary knowledge, and from the source of his deliberation over here, I request all of my gatherings on the dais to listen to him with so much of our patience. He can give us the impetus how to frame this budget in different areas of economics. So I request my honorable guest to talk about this budget, and our avid that audience, they are very much curious to learn from you what's the basic ideas regarding this budget. Sir, please come.
Thank you, sir. Now I would like to request our Chief Guest, Dr. Santosh Kumar Mahapatra, to bridge the session with his valuable deliberation. So please.
Thank you all. Esteemed Dean of this institution, Professor R K Sahoo, esteemed Vice Principal, Devasis Nanda, my dear faculty members, and my dear students, friends. I have the immense pleasure to be here to share my ideas, feelings, thoughts about to society as well as a budget. The budget cannot be separated from society. Budget cannot be separated from you. It is not first time that I have come here. I have come, probably this is the third time I am coming. And I am more associated with your Vice Principal, Devasis Babu. When he was also Sushti Academy, he has, at that time I was associated with him since then. It is not that I have learned everything on the budget and you know nothing. That is not also thing. You have also some knowledge, I have also some knowledge. Interaction strengthens knowledge. You learn from me, I learn from you. And as a writer, practical experience is also very important. Theory is one aspect. Life without practical experience, knowledge about ground reality is very important. You cannot write anything, you cannot speak anything in a pro-people angle unless you have experience about the ground reality. Writing or speaking in a AC room it is something different from having interacting with the masses. That is why whenever any institution invites me, I gladly accept and attend the meeting or seminars. Yesterday I had gone to Raghunath College, there a function. 2 days before, I had also addressed webinar of Keunthar DD College on same budget. So it is the experience of interacting with students and faculties strengthen my knowledge. So I once again thanks to you all, your organizer, for helping me to augment and strengthen my knowledge. So I am really indebted to you, rather you should not be indebted to me. Now coming to the budget. budget is a part of fiscal policy. We have different policy, and a government has different policy. Fiscal policy, monetary credit policy, export import exempt policy, exchange rate policy. Those are four policy. Fiscal policy is most important. Then comes monetary and credit policy. Fiscal policy deals with the income and expenditure of a public authority, government. Monetary credit policy deals with the interest rate management, tackling inflation, deflation, recessions, price stability, so on and so. Exchange rate policy decides your foreign exchange value. We have floating exchange, exactly not floating exchange, managed float exchange rate. That means exchange rate is determined in the market, that is floating, but sometimes the government intervenes by purchasing foreign exchange or selling foreign exchange when it finds that value of rupee is declining or rising so rapidly. And export import policy is also decided by government. I am not going to other three aspects of policy because this is the time of discussion, or here it is I have to discuss about the budget. What is budget? That is the most important thing. Budget is known by better your wife or a woman member of the family. Men knows men earn the income. Of course, today women are earning income. My wife is also working as where I am working. Is there? She is also working because they manage the family. How to spend, how to save. Mostly a family progress, it depends upon not male member, but it depends upon female member. How they build up their children, how they nurture their children, how they spend, how they save. The more a success of family is more related to a woman than men. You are going to celebrate a Women's Day a few days back, a few days after. So woman knows better budget. Just your family budget and nation budget, it is more linked. In family, you raise resources, you earn, you spend. If you have shortage of income, then you borrow. In the national level, similarly, government has to raise resources and spend. When there is a shortage of revenue or resources, then it borrows. Budget is not exactly just only the income and expenditure of public authority. It is an important aspect, but budget shows what direction a government wants to lead the country, lead the economy. Where it is giving priority, where it is giving not priority, what problems it is going to address. How it is reducing poverty, hunger, inequality, all those things. How it is diverting the resources, how generating resources, how spendings, what it should address inequality, poverty, hunger, starvation, distributive justice, role of the state, all these things to be addressed. Budget shows the direction where your economy is going to be moved in that financial year. That is the most important thing. So you cannot simple the budget is only the income and expenditure. There are three aspects of budget. Three accounts. One is a consolidated fund, another is a public account, third is contingency fund. Consolidated fund means revenue generated or resources borrowed or non-tax, tax, all are kept in the consolidated fund. Public account is usually the resources generated through post office, postal, national savings fund, public provident fund, all are go into the public account. And government is the manager of this public account fund. Government is not owner of this fund because this has to be repaid to the people. Emergency contingency fund means when there is some emergency, there is need of expenditure, so government spend, because in order to spend anything that must be passed in the parliament. But in case of suppose there is a war, suppose there is some problem, natural calamity, then immediately money from contingent fund is spent, then it is replenished later and it is passed in parliamentary return. So these are the three important, but consolidated fund is the most important. Budget has two sides, income and expenditure. Income is generated by way of taxes, non-taxes, by way of disinvestment, capital receipt, revenue receipt. Revenue receipt, two aspects, revenue receipt and capital receipt. Let us, it is divided to two. Revenue receipt means revenue generated through taxation. Taxation are two types, direct tax and indirect tax. Direct tax, when it is burdened directly to the person who pays. Indirect tax, it is go down till the end consumers. For example, direct tax is income tax, wealth tax, inherit tax, security transaction tax, banking transaction tax, corporate tax, all are direct tax. We don't have a wealth tax and inherit tax. That burden fall who pays it. It does not pass to next person. Indirect tax is GST, excise tax, custom duty, VAT, all are indirect tax. You must remember, direct tax is progressive, indirect tax is regressive. Why indirect tax is regressive? Because it taxes the rich and poor at the same rate. Suppose, for example, you wanted to purchase any items, commodities or goods or services. If Ambani purchase, Ambani pays the same rate as a beggar pays the same rate. So that is why a government should raise resources through direct tax more, less through indirect tax. But our policy is gradually consumers are burdened through indirect tax. This is a regressive system because burden is shifted to the consumers, poorer section of society. Somebody people tell poor people do not pay tax. Actually, poor people pay more tax. Remember, rich pay less tax. Poor people pay more tax. Why poor people pay more tax? Because they pay through indirect tax. Your savings interest is taxed. You pay tax on the insurance premium. You purchase, you pay tax when you purchase any commodities, services. Everybody pay tax, but nobody tells about this. Only they tell it and direct tax. Why rich pay less? Because, for example, today when I was coming in your vehicle with the Devasis Babu, I was also looking into Google. The income of a total net worth means your asset minus liabilities, which is called net worth or wealth. Net worth or wealth of Aishwarya Rai Bachchan, it is 750 crores. Those who are playing in the IPL, they are earning crores of rupees overnight. Those who are celebrity or players, richer section of society, they are earning crores of rupees every day. But they pay 30%. When my annual income exceeds 10 lakhs, I pay 30%. When their income is 1 crore, 100 crore, 10 crore, 15 crore, 1000 crores, they also pay 30%. That means once upon a time, our tax rate, income tax rate, highest tax rate slab was 97% in 73 and 74. I am not telling that must be taxed. It is too huge. But after 30%, if income of 10 lakh say pays 30%, that means income above 40 lakhs must pay 40%, or 1 crore must pay 50%. That means when they are not paying taxes as percentage they are required with the rise of their income, that means they are given tax subsidy. Everybody tells you nothing is evaluated in terms of absolute number. Your salary increases absolute number. Everything is evaluated as percentage of your annual income, as percentage of GDP, as for in relation to other countries. In other countries, higher income tax is much more than also 50%, 60%. So actually, what is popularized and what is publicized that rich pay the more tax, actually poor pay more tax. So you must understand as for proportionate of income. Everything you will do PhD, you derive figure as percentage, not as in absolute term. Direct tax, we don't have a wealth tax. corporate tax has been reduced. In 2019, corporate tax was reduced, and once upon time, resources generated by corporate tax was 2 times more than income tax. But 2 years back, after reduction in corporate tax, resources generated by income tax is not higher than the corporate tax. 2 years back, now it is again slightly changing. Effective corporate tax is declining. That means due to various concessions, all over worldwide, it is a corporate tax was around 40% in 40 to 45%. But the corporate put pressure on the government of every country to reduce the corporate tax. So every country is pressurized to reduce the corporate tax because they are controlling the government. It is very true things. Some countries have a wealth tax, we don't have wealth tax. Some countries have inheritance, we don't have inheritance. There must be inheritance. I am in favor of wealth tax, inheritance rather than income tax. Because when you accumulate property, it should not be passed all to your generation. Your next generation should work hard to earn income. You have worked hard to earn income means you have to enjoy it. Your children must have to work hard. But your children must be provided education, health, housing, medical, all other facilities free of cost. That should be the motto of government, welfare state, but that is not happening. So what is happening? Our tax GDP ratio is one of the lowest in the world. It was estimated to be 10.27 or 12.7% in this budget, 2022 and 23. 2017-18 it was around 11.2%. But in most of the countries, it is central tax GDP ratio. In most of countries, it is 30%, 40%, even 50%. So our tax GDP ratio is one of the lowest. That means GDP growth of a GDP that we boast of, India is the highest growing country, highest GDP growth. But in terms of per capita GDP divided by total population, in terms of per capita GDP, India occupies 145th position. That means behind 144 countries. That we must understand. That means our GDP is not reflected in the well-being of the society. It is not reflected in the rise of taxes. Then what is the meaning of GDP? GDP is simply an economic activities of a financial year. So, because our tax GDP ratio is low, so that is why government has to borrow more. It is not India's government, many other countries are borrowing. America is the largest debtor country. America, Japan, their debt is more than 120%, 130%. But they can sustain because they have our own reserve currency. We don't have a reserve currency. That is the biggest drawback of India. As far as what I was discussing about tax and non-tax revenue are generated. Tax revenue deficit means revenue expenditure minus revenue receipt, tax and non-tax. Revenue deficit tells how much government is spending not in creating asset. Revenue expenditure, salary, day-to-day activities, all are revenue, interest payment, revenue expenditure. That does not always create asset, but that is also important because that is stimulating. When you get salary, that stimulates economy. That you spend. So revenue expenditure not as popularized. Revenue expenditure also indirectly create revenue deficit, revenue capital asset. But revenue deficit is revenue receipt minus revenue expenditure. That is revenue deficit, which tells how the borrowing money government is spending. Fiscal deficit means excess of expenditure over non-borrowed receipt. Mainly in most of the English Delhi, National Delhi, write expenditure minus income as fiscal deficit. That is quite wrong. Excess of expenditure over non-borrowed receipt. You must understand. Non-borrowed receipt, you have a revenue receipt and a capital receipt. In capital receipt account, there is a loan what government borrows. That is part of capital receipt. Borrowing is part of capital receipt. So excess of expenditure over non-borrowing receipt is known as fiscal deficit. Fiscal deficit tells how much government is going to borrow. In this budget, the government is going to borrow 16 lakh crores. It is around 6.4% of GDP. But it should be 3 to 4% of GDP, because you must remember, borrowing is not bad. Borrowing is not bad, provided it leads to creation of asset, it leads to the growth, it leads to the welfare of the society. You cannot build a house without borrowing. You cannot purchase a vehicle without borrowing. But it must be spent on the productive activities. And when borrowing is made, it should lead to growth. So as percentage of GDP, debt should be same. Because when you borrow, your GDP grows.